was the world's #1 reformer last year, and that's obviously to its credit. It jumped 32 places in the rankings, but it's still relatively poorly ranked at around, I think, in 62, I think it is, in the World Bank, whereas the UAE is in the teens. Yeah. So there's quite a lot of catch-up to do there.
I mean, we've talked a little bit about the UAE, about Saudi Arabia. As you look at the Middle East map, which other country would you point to in terms of potential economic upside surprises as we prepare for the first half of 2021?
That's a tough question. I think that probably we should see positive momentum across all countries in the first half of 2021, given the vaccine news and the global recovery, which I think is the tide that is going to lift all boats. But where there might be idiosyncratic stories, I think we probably look to the UAE, in particular recovery in Dubai tourism. I think is going to be a very positive story in 2021. I'd like to see a positive momentum coming out of Kuwait. There's a new parliamentary election coming on the 5th of December, and hopefully the new parliament can get beyond the impasse and issue a debt law and ease the very difficult situation that's currently brewing in Kuwait. So those are probably the ones that I watch out for most.
Up next, U.S. officials say vaccines could bring herd immunity to the U.S. by May, but what about the rest of the world? This is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience.
Consistency is more important than volatility.
There's very likely to be a decoupling between the United States and China.
Look, I think the reality is this is highly unusual.
This is a really good example of the intersection of business and government.
Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Welcome back to the Best of Daybreak Middle East. U.S. officials said this week that the first vaccinations against COVID-19 could be administered by mid-December. If given the green light for emergency use, the White House Vaccination Task Force, known as Operation Warp Speed, says it's aspiring for herd immunity across the country by May. Meantime, global leaders promise to ensure poorer countries have equal access to any vaccine as they met at the virtual G20 summit.
With the advances we are witnessing in the COVID-19 vaccine development, our top priority is to ensure affordable and equitable access to the vaccine and diagnostic tools for all.
Substantial financial gaps still need to be addressed, and we require innovative financing tools and pathways and an active involvement of the private sector.
Und dabei kann die G20 wichtiger.
If we stand together across the globe, we can control and overcome the virus and its impact. It is worth redoubling our efforts to achieve this.
Qu'avant la fin de l'année, un vaccin sera disponible.
We can reasonably expect that before the end of the year, a vaccine will be available. But another battle, a harder one, needs to be fought. Universal access.
The UK has committed to equitable global access for any vaccine, and I would like to see the G20 nations collectively step up and support that effort.
Korea will work in partnership with the international community to put a complete end to the COVID-19 pandemic. We will marshal the forces to develop and distribute vaccines and treatments.
However, with infections still surging, investors remain cautious, particularly after a public spat between the White House and the Fed over emergency lending. We got more with Sue Trin, Managing Director and Senior Macro Strategist at Manulife Asset Management.
Let's talk about this vaccine. We need to reiterate that a medical solution, while very welcome for humanity, is not an economic solution. A vaccine won't be widely available in the next 3 or 6 months when even more economic damage is expected to be wrought, especially with this latest surges in COVID around the world. And we are seeing strong evidence of permanent structural damage. And as big as it is, we need to see structural solutions. A vaccine simply doesn't get to the heart of that. As for the rotation from growth to value, the market has already started to price that in recent days and weeks. But really the question is, are we in for a more permanent rotation? And for that to actually happen, we need to see a sustained recovery and growth, and we're just not seeing that at all within the next 3 or 6 months.
Sue, just to make things a little bit more difficult, to say the least, you've got this rift that is beginning to crystallize between the Fed and the Treasury. Now, does that raise the expectations that the Fed is going to move as soon as next month in terms of buying some of the longer maturity debt?
It does realize a concern that we've had for quite some time, not just in the US, but economies all around the world, and that is the evidence and risk of fiscal cliff happening. Now, this rift between Treasury and the Fed, I am sure there is an element of political brinkmanship going on there, but we need to recognize that established or favored forms of stimulus, if the onus really is going to switch to the monetary authorities, the favored forms of stimulus that we've seen to date simply just don't reflate economies. Japan is a classic example, and we've seen the latest numbers out of Japan showing deflation accelerating at the fastest pace in some 9 years. The manufacturing PMI numbers for November falling to the lowest for the first time in 6 months. So we're not seeing this portfolio rebalancing that's very positive. In reality, there is still a very strong reach for highly liquid, highly safe government bonds, and this is the reason why the treasuries are just simply unable to back up and yield in a meaningful manner.
And let's just extend that, Sue, because we see positioning in the Treasury market at quite an extended, elevated level. I mean, the longs are as high as they've been for the past 3 years. With the narrative of risk, potentially, of a softening of growth into the first quarter of next year, is that, in your mind, what takes me closer to 0.6% than it does to a break of 1% in the Treasury market?
Yes, I heard what you said, quoting Ben Emmons there, and I respect him greatly, but I would take the other side of that trade. Yes, perhaps institutional positioning is quite long, but the speculative positioning looks to be right behind this latest backup in yield, and speculative positioning, as we know, is ripe for reversal and can turn on a dime, and ultimately when the economic reality is realized, that can switch quite quickly. We would favour the long bonds and long duration, especially at these levels, look quite attractive to us.
Up next, the UAE scraps the need for companies to have Emirati shareholders. We look at the implications. This is Bloomberg.
Just give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Welcome back to the best.